Everyone, welcome to the channel. I'm here today to talk about the Austin real estate market. And I know many of you are wondering, is Austin really on one of the coldest markets in the US right now? And more importantly, are we headed for a housing crash? I'm excited to dive into some data and give you a clear picture of what's happening on the ground right now. I'm going to look at some key indicators that are shaping our market, what they mean for you, whether you're buying, selling, or just keeping an eye on things. Let's get into some specifics and see where Austin stands compared to the rest of the country. Before I get into it, Nick Garcia, All City Real Estate, been helping people in the Austin and surrounding areas for over 10 years, have helped hundreds of families relocate from all over, and really excited to share some real estate info with you today. So let's cut right to it. Austin is currently ranking near the bottom of the National Housing Heat Index. A recent study by Construction Coverage looked at over 800 cities, and Texas as a whole is the coldest housing market state. Austin itself came in 51st out of the 52 large U.S. cities, making us the second weakest large city market nationally. This isn't just a minor dip, it's a significant shift from the market we saw just 2, 3, 4 years ago. This composite score considers things like price changes, how many homes selling above asking, and how long homes stay on the market. This data really sets the stage for understanding the current dynamics, and it leads us directly into how buyer competition has changed. So, following up on that national ranking, one of the clear signs of a cooling market is how few homes are selling above asking here in Austin. Now, right now, it sits around 10% of homes in the Austin area MLS are closing above their final list price. That's a dramatic drop from the frenzy we experienced in 2021 and 2022 when they were all selling significantly above list price. So what this means for you is that buyers have real negotiating power. With an average sold to list price of around 97%, buyers are, on average, negotiating roughly 3 cents or a little bit more off of every dollar. This shift in negotiation power is also reflected in how sellers are approaching their pricing strategies, which we'll look at next. So building on that idea of buyer power, we're seeing a lot of price reductions across the Austin metro. Nearly half of all active listings in our area, around 47% to be exact, when I put together this presentation, have already had at least one price cut. And this number is going up. This is significantly higher than the national average of about 34%. This widespread trend tells us that there's a clear disconnect between what sellers expect and what buyers are actually willing to pay. A big part of this is sellers still trying to price their homes based on the peak market values from 2022. The market has definitely pushed back on that significantly, and it's a crucial point to understand as we consider whether this is a correction or something more severe. Now, it's important to put these price reductions and market shifts into context. The market is correcting, not crashing. Price adjustments are a normal part of how real estate works. Sellers often price a bit high and then adjust to find the right buyer. What we're seeing is an orderly correction, not a free fall. For example, the median sold price in the city of Austin is down about 6.8% year over year. And the broader Austin area MLS is down a more modest 2.2%. Both of these figures are still well above pre-pandemic levels. The sold to list ratio of 97% also confirms the gradual, orderly adjustment. And it's a key indicator that we're not in a crash scenario, and there's no indicators that that is going to happen. So while the market is correcting, not crashing, it's important to look at inventory. Austin's inventory is significantly elevated, and we're seeing a real pullback from its peak. This means the flood of new supply we saw in mid-2025 is starting to ease, which is a meaningful signal for the market. Even with this pullback, buyers still have a lot more choices than they did last year, with inventory up almost 3% year over year, and this is also growing. So we're sitting at close to 6 months of inventory, which puts us kind of in the neutral zone. So this suggests a more balanced market. But as we'll see next, that balance isn't uniform across the entire metro. So while inventory is finding its footing, it's crucial to understand that Austin is firmly in a very much so a buyer's market, but not so much everywhere. The overall market is softening with less than a quarter of active listings going under contract. This means buyers have more leverage, 100%. However, this isn't a blanket statement for the entire Austin area. Some northern suburbs like Cedar Park and Pflugerville are actually in very certain pockets leaning towards sellers, where there's much tighter inventory in higher demand areas. On the flip side, areas like Dale and Spicewood are way oversupplied, offering significant opportunities for buyers. This really highlights how hyper local our Austin market is, and your specific zip code tells a very different story, which leads us to some of those hot communities that are bucking this trend. So, despite the broader market trends that we just discussed, some communities are truly bucking the trend and will remain hot. These areas share key characteristics. They're close to major employers, have top rated schools, and offer desirable lifestyle amenities. You want to think of places like Cedar Park and Leander with their strong tech corridor and low inventory, or Mueller offering walkable, sustainable living. Even East Austin, with its cultural vibrancy and proximity to Tesla, is seeing strong demand in some areas. These communities prove that even in a softening market, specific locations with strong fundamentals will always attract buyers. But what does this all mean for the bigger picture? Is there a crash on the horizon? What's going on? Many people are asking if a housing crash is coming, and the answer is a definitely resounding no. The most critical ingredient for a crash is a wave of distressed sellers. Simply isn't present in our market. Homeowners aren't being forced to sell. They're choosing to pull listings if they don't get the price that they want. We've had rates between 6 and around 8% even for around 3 years now, and that hasn't triggered forced selling. The market is atrophying, not crashing, meaning incomes are slowly catching up to the prices. Inventory growth has also slowed significantly. All the data points we typically look at before a crash just aren't here. So while the market is adjusting, it's doing so in a orderly fashion, and that's a good sign. So we've established that a crash isn't likely. Affordability still remains a big factor in our market. Mortgage rates are holding steady near 6.44%, which is a significant point for both buyers and sellers. These rates have been in the 6 to 7.5% range for about 3 years, and they really directly impact who can qualify for a loan. So we've seen a clear cause and effect. When rates consistently climb above 6% recently, pending sales in Austin starts to soften. Mortgage rate applications drop. So while pending sales are up year over year, our cumulative volume for the year is still behind last year's pace. So this means higher rates are putting more pricing pressure on sellers. It's crucial to talk to a lender to truly understand your affordability window in this environment. So let's look at what all this means for buyers and sellers right now. So with those mortgage rates in mind, what does this all mean for you, whether you're buying or selling in Austin or in surrounding areas right now? Our market is active, but it's still very selective. Homes that are priced correctly in desirable areas are moving, and sometimes they're even seeing some competition. But if a home is overpriced, especially in a very soft zip code, it's just sitting until the seller adjusts, comes back down to reality. For sellers, this means you absolutely must price your home from day one based on current comparable sales, not on those peak 2022 numbers. You should also expect buyers to negotiate because over 65% of homes are closing below list price. And that's numbers growing. For buyers, this is a great time. Most Austin zip codes are below their 12-month price peak, and you have real negotiating room with the average buyer saving about 3% off the list price. Inventory is ample, so you don't need to rush, but be ready to move quickly on those well-priced homes in tighter areas. Now let's wrap up with some key takeaways and some next steps for you. So to sum everything up, the Austin real estate market is in an orderly correction, not a crash. Prices are down significantly from that peak in 2022. And while inventory is elevated, it's starting to pull back. The key takeaway here is that our market is incredibly hyper-local. The data doesn't support panic, but it absolutely demands a smart strategic approach, no matter what side you're on. Remember those key numbers. We have about around 15,688 active listings, close to 6 months of inventory. The median sold price for the Austin Metro is around $421,000, and 46% of active listings have seen price reductions. Only about 10-ish percent of homes are selling above asking, while 65 plus are closing below. And that 30-year mortgage is holding around 6.5%. So those are some key numbers to keep in mind. But again, hyper-local, it depends so much on what area of Austin that you're looking at. So for your next steps, I encourage you to check the description for my Austin relocation guide. You can also book a meeting with me if you want to talk about what a strategy for selling or for buying in the Austin area. If you're looking at lifestyle schools, I can help you out. Commute times. I've helped people all over the Austin area. with figuring out exactly where the perfect ideal location is for them and their family. So I'll see you for the next video. Appreciate you watching.